Good morning, everybody. It is Wednesday, the 17th of January, and we've got two large bits of news out this morning: the inflation, and also in the last half an hour, the UK's house price index and the land registry has been released for November. We are mid-January. They're reporting November completions. On last night's live stream, on last night's live stream, you will have heard me say that I don't know what's going to happen with interest rates and inflation because there's too much uncertainty. And this morning, the inflation print has come out, and inflation has, to the surprise of most commentators, it's actually gone up again. The people were expected to go from 3.9 down to 3.8, but it's gone up to 4.0. Now, I'm not saying I was expecting that. I didn't know what was going to happen. I didn't have any expectations because there's too much uncertainty. And I have just felt like there are too many variables for anyone to be able to predict it accurately, which is why the majority of commentators got it wrong. I wasn't disagreeing with market expectations. I was just saying I don't know why the markets got those expectations. I don't have any because they're not certain enough. Now, as you know, if you've been watching my channel for a long time, there are areas where I do have very strong expectations. And in this video, I'm going to be really quick. This will be less than 10 minutes, this video. We'll look at the land registry house prices and inflation. I want to explain the concept. So one of the things that is quite difficult, a quite difficult thing to achieve, it needs to be learnt, is to actually, and you need to constantly work on it, is to try to have total neutrality and remove all bias. And I know some of you don't believe I can do that. And I'm not saying I do it perfectly, but I work very hard on removing my bias. And I try to remain objective to whatever is happening. Now, there are a few things that we do know are factors in this year's economy. I'm going to pull them up. There are at least 8 major uncertainties in this year's economy. And one moment, sorry, I just want to get them on the screen and read them out to you. This is a bit of a rush, not very prepared this morning. Apologies. Come on, where are you? Here we are, right. So these are the 8 uncertainties that we know about. Okay, number one, in no particular order. Ukraine conflict, how long it will go on for and what the outcome will be. Nobody knows. That is a major uncertainty. You may have opinions on it. Nobody knows, and I certainly wouldn't want to call it either way. Number 2, the Israel-Hamas war, how long that's going to go on for and what the potential consequences of that will be, even if it doesn't spread. Number 3, the risk of it spreading, as we're starting to see there are skirmishes happening in Lebanon and in Yemen and in the Red Sea. And at the moment, efforts to contain that spread look like they're partially successful, but not fully successful. It's uncertain. I'm not saying I don't have expectations, but it is an uncertainty that would have an impact on the global economy. The situation between China and Taiwan, the rhetoric's been stepped up. This is point number 4. The China-Taiwan rhetoric. If I don't know if China's going to actually start marching into Taiwan or not. They're saying that they will take it no matter what. Taiwan's saying they won't let them no matter what. Who knows what will happen and when, but it is an uncertainty, and that there is rhetoric down there. Supply chain disruption potentially from all of these different conflicts. And supply chain disruption, we do know, does impact the global economy in multiple ways, all bad. Bond market conditions. So this morning on the back of the inflation news, bond yields have jumped again, creating more uncertainty in financial markets. And yesterday there was a story on Bloomberg about how pension funds or major funds are preparing for a big bond sell-off. And that didn't hit the news, and I think it should have hit the news. It's big enough news. We've then got, in this country, an election. And even though there may be quite a high degree of certainty expected in the UK's election outcome, in that the Tories will lose, there's not very high levels of certainty in what we're going to get. Will it be a full Labour majority? Is it going to be a hung parliament? Will we get a coalition? And also between now and the election, there are many, many things that will pop up and come out of the woodwork. Will the effect of the Reform Party, will they have a big effect on it or not? Might the Reform Party actually end up taking votes from Labour that they weren't expecting? Nobody knows. I think there's more uncertainty than people realise in that. We've got the US election. Now, okay, it looks pretty certain that Donald Trump will get the Republican nomination, but that doesn't mean that he's necessarily going to win the election. And if he doesn't, if the Democrats win the election, will it be Biden or will it not be Biden? Will he even still be alive when we get to those elections? And depending on the outcome of the US election, which is totally uncertain, what happened to the relationship with China and potential for conflict in Taiwan? All these things. And then finally, of course, number 8 is what's going to happen with inflation and interest rates. And because of all the things that I've just spelled out, I listened to Christine Lagarde being interviewed on Bloomberg this morning at Davos, and it was a really interesting thing because she basically didn't say anything. She doesn't know what's going to happen. There's raging uncertainty. She was asked about what happens in the US election, and basically she was saying, I don't know, we're trying to get inflation down. It's not going to be easy. I think she suggested that it's unhelpful that people keep saying that interest rates will come down. That's unhelpful, she alluded to. So all of those uncertainties, which are just off the top of my head, and all of them have further uncertainties if you dig down deep into them, create one, in my opinion, relative certainty, which is that financial markets don't like uncertainty, and it creates volatility in the financial markets. And a rise in volatility means sharper movements in price. So if the normal daily movement is that much, when volatility increases, the movement in prices is much more uncertain, much more uncertain. It makes everything much riskier. And what the UK economy and the UK consumer does not like is uncertainty. UK businesses want to know where they stand on their costs, on government policy, who's going to be in charge. All of this uncertainty has a highly predictable effect on the economy and on consumer confidence. Okay, and all of these things lead into, in my view, further downward pressure on house prices, because it's unfortunately and very sadly, and is the opposite of what I want, it's going to lead to further downward pressure on transaction volumes. There'll be a little bit of seasonal ups and downs on transaction volumes, of course, but generally speaking, all of this uncertainty is a negative impact on the housing market, which is a bad thing. Right. For those of you who haven't seen it, very, very quickly, I've got 2 minutes left. Let's get the inflation print up on screen here. One moment. Here it comes. Okay, so here we've got, and they put it down on point number, this one, CPI, that's the main one, rose by 4% in the 12 months to December 2023, up from 3.9% in November, and the first time the rate has increased since February last year, or almost a year, the first time it's increased. Now, what could that mean? Could it be a blip? Could it be, there are 3 outcomes, and I don't have a strong opinion on which one of these is because there's too much uncertainty. Maybe there are people who strongly believe inflation is on the way back up. I don't know. There are people who think that inflation is going to stick like glue now and just not budge and be at around 4%, annoyingly. And then there are people who think this is a blip, the trend is down, inflation will continue downwards. If you forced me to pick one of those 3, I would pick the middle one. I would say that if I had to bet on whether inflation is going to go back up, whether it's going to stay where it is, or whether it's going to come down, I would bet reluctantly and with a low level of certainty, I would bet on inflation sticking at around about 4%. But that is not based on any data or anything else. That is based on I think that's the least unlikely scenario is that it sticks. Alex Groundwater, Housing Stig, I'm pretty certain is expecting deflation. He's expecting inflation to fall further and faster. So he and I are in different camps on that. But what all of this means is, the market, all the papers, all the market, every single day, rates are going to fall this year, rates are going to fall this year, rates are going to fall this year. The Bank of England doesn't even know the rates are going to fall this year. So how can anyone else possibly know what they're going to do? And all of the banks and the European Central Bank and the Fed have all said, don't expect too many rate cuts this year, if any. The people who actually make the decision have been putting out a very clear message, which is Yeah, it's not clear that's what's going to happen. The market said, no, the market's priced it in. The market's priced it in. The market. I'm sorry. This morning, yes, it could. Maybe it's a blip. Maybe it's going down. But I think that's a risky assumption to make. Now let's move on to house prices. So, average UK house prices decreased by. Oh no, sorry, that's the wrong month. That's for last month. Here is this month. So actually, it's interesting to see. Last month, average UK house prices decreased by 1.2% year on year. This month, so here we are. So this is released today. Is that on screen? Just checking. Yeah. Let's just put it back up nice and big. So this is just fresh off the presses in the last hour. Okay, so we are in mid-January. This is for November 2023. Okay. So it's reporting completions in November. And it's saying that annual house price decreased by 2.1%. So that's a significant acceleration. And because of the roughly 5-month delay between prices being agreed and price and completions happening, you can then take 5 months off November and go back to June. So for deals being agreed, house price sales being agreed in June last year, roughly, house prices were down. On the average transaction value was down 2% on the year before. So you must remember the very, very heavy lag in this data. They've also revised last month's falls down from 1.2% to 1.3%. That's a revised estimate. So they revised a larger drop than was reported. England actually had the biggest drops year on year. And again, remember, this is what the market was doing around about June. England was down about 3% year on year, around about for deals being agreed in June. Wales 2.4% and Scotland 2.2%. Sorry, increase in Scotland 2.2%. And went up 2% in Northern Ireland. Now, it's really important to remind everyone about this. The transaction volumes available to calculate this have been considerably lower than historically. Revisions may be larger than usual in the coming months, especially for new build breakdowns. All right. So I'd like to clarify my position for those of you thinking, but hang on, Charlie, that's 2%. It's not very much. That's not a house price crash. Well, first of all, I've never expected a house price crash. I've said 3-year slide. June last year, June 2023, was roughly 1 year into the slide, because the slide began in summer 2022, slowly. Okay, so what's being reported today is that house prices fell a year between 2% in the year from the middle of May or middle of 2022 to middle of 2023. So we are only just now seeing from the land industry what the first of the 3 years of falls that I'm expecting were. And okay, you're saying, but Charlie, still 2% is not a big slide. I don't think that the average transaction value reflects what's happening to actual prices. For reasons I've repeated many, many times, I think actual house prices have fallen significantly, but the overall average has been skewed by a number of variables, mostly that the downsizing effect. So first of all, I do think house price falls have been higher at the higher end and smaller price falls at the lower end. Okay. And secondly, the change in the number of transactions at the lower end actually makes the average go higher. So that's my view. So this is not, in my mind, any evidence to make me rethink what I'm expecting to happen to house prices over 3 years. And we won't know whether I was right or not until the land registry report stuff in 2026 for 2025 prices, if that makes sense. Anyway, guys, have a great day. Onwards and upwards. Barry Brown says, have you seen the most recent data from London? Down as a whole 7% since September 22. Kensington 25%. Detached houses in Kensington 30%. I haven't seen that data. I don't know where that's from. Where is that from, Barry? Craig Wood says, I can give you uncertainty. Mortgage defaults are increasing. I would agree with that. Searching for Truth says, when will houses fall 30%? Okay, you've got to understand that that's an average. It depends where you're looking for the house, and it depends whether it's a high-end or low-end house. As you've just seen, there are areas where house prices at the higher end have already fallen 30%. So specifically, it's happening in some places. It'll take longer to happen in others. The answer to when is you won't see those falls on average having happened until 2025, not reported until 2026. Guys, okay. Shaz Gently, that's a really good question. Did prices take this long to fall in 2007? It felt like it, yes, because what people always forget is that at the time, it never feels like a crash, and you don't see it reported until after it's happened. And so no one knows when it's happening. The tipping point and the steepest falls have no visibility at all, which is why I'm launching the open source house price index that will report this month's exchange prices. And if we're going to report this month's exchange prices, it will show a very, very different picture to what's being reported by the industry now. Guys, have a great day. See you on the next one. Thanks a lot for watching. And if you need me, you can find me on my website, mhwc.co.uk. If you want to book time with me or you want to talk to my conveyancers or my mortgage brokers, there it is. Have a fantastic one. See you on the next one. Remember, if you need a home and you can afford it, now is always the time to buy. Just don't overpay. And if you need to sell, don't overprice. Thanks, guys.